What's coming is worse than a recession. On Monday, JPMorgan Chase CEO Jamie Dimon said that the United States and the rest of the world were likely to enter a recession due to a very, very severe combination of challenges. The head of America's biggest financial institution has also said that the American economy is really still performing well, and that people are likely in a better financial situation now than they were before the global financial crisis of 2008. At the JPM Techstars conference on Monday in London, Dimon told CNBC's Juliana Tattlebaum, "But you can't speak about the economy without talking about things in the future, and this is big stuff." Dimon mentioned the impacts of runaway inflation, interest rates rising faster than anticipated, the unknown effects of quantitative tightening, and Russia's involvement in Ukraine as warnings of potential trouble ahead. And these problems could be even worse than a recession. Experts in the economics field have been warning of an approaching recession for months. This year, the Federal Reserve has been proactive in raising interest rates to combat rising inflation. The Federal Reserve hopes that by raising interest rates, consumers would begin to cut down on their spending and help reduce the supply and demand imbalance that has led to skyrocketing prices. The Fed is taking a chance, however. A significant slowdown in consumer spending is possible if interest rates are raised too much. As a result, it's possible that this might help spark the recession that so many people dread. Now, the bright spot in this cloudy picture has been the robust job market. Experts in the field of finance have come around to the view that a recession is possible, but they are less certain that it would be severe or last for an extended period of time. However, JPMorgan Chase's CEO Jamie Dimon has been sounding some ominous notes about the economy as of late. This is a warning that must be taken seriously. The main question here is that, what could possibly be worse than a recession? Dimon recognizes the current strength of the U.S. economy, but he remains pessimistic about the future. He also warned that something worse than a recession is possible in the near future, with odds of 20% to 30%. Now, in economic terms, we often conceive of a full-blown depression as being what's worse than a recession. But let's be clear, Dimon isn't claiming that he's confident we're already going in that path. He sees it more as a possibility for which society should prepare. How to prepare for a recession? What can people do? The truth is that not even the most seasoned economists can say with absolute certainty when, how severe, or even if a recession will occur. There are times when it's best to let things develop naturally. Yet, in light of the numerous warnings, it's never a bad idea to stock up on supplies in case a recession actually does hit. Increasing the size of your emergency fund is a smart move in preparation for a potential economic downturn. The pandemic has led many experts to urge the public to increase their emergency fund savings goals from the typical 3 to 6 months. Some financial experts, like Susie Orman, argue that a savings account should contain the equivalent of 8 to 12 months' worth of living expenses, so the nearer you can get to the target, the better. It is also beneficial to minimize the burden of expensive debt. You shouldn't be carrying a credit card balance if you expect more interest rate hikes to come later this year or early next year, as doing so could end up costing you more. You also don't want to have a lot of monthly debt hanging over your head if the economy takes a turn for the worst. Finally, make every effort to improve job skills. This won't eliminate your risk of being let go in the event of a company-wide layoff, but it could mitigate it. It will also help you find a new job if you ever find yourself unemployed. This is not the first time this year that Dimon has issued a dire warning about the economy, and it likely won't be the last. Keep your cool and be prepared for the situation to possibly escalate. Though hazy, JPMorgan's CEO's prognosis is more gloomy than that of most other business leaders. CEO of BlackRock, Larry Fink, recently told investors to keep calm and carry on, calling the economic headwinds currently roiling markets business as usual for long-term investors. While CEO of Goldman Sachs, David Solomon, similarly warned that there is trouble ahead, urging people to prepare for worsening inflation and an approaching recession. Fink asked, "Is there a possibility of a recession?" on Jim Cramer's Mad Money on CNBC. No doubt about it. And if we do get into one, it will be rather moderate. CEO of Deutsche Bank, Christian Suings, thinks there's a 50-50 possibility of a recession. But Harvard economist and Obama administration economic advisor Jason Furman says the likelihood is lower. CNBC's most bullish market expert, John Stoltzfus of Oppenheimer & Company, predicted that not only that the market will not enter a recession, but would instead grow by 40% from its current level by the end of 2022. This forecast was shared by other Wall Street analysts, including David Roche, who noted that things do turn around at this juncture. On the other hand, there are some who share Dimon's concern that something worse is on the horizon. One of the most dismal forecasts came from Bitcoin bull Mike Novogratz, who told MarketWatch that the U.S. was headed for a very quick recession and that, ultimately, the economy is going to implode. Companies are already cutting down, with Walmart and Target lowering their profit projections and tech giants Shopify, Apple, Meta, and Microsoft announcing layoffs and recruiting freezes. While speaking to staff on a conference call, Meta CEO Mark Zuckerberg made one of the grimmest predictions. "If I had to wager, I'd say that this would be one of the worst downturns that we've experienced in recent history." As a result, Dimon advised market players to evaluate a spectrum of possible outcomes rather than trying to predict how long a U.S. recession may persist. The outcome of this battle will have a significant impact, and its severity may range from light to severe. So, I believe guessing is challenging. Therefore, you should be well prepared. Dimon said that the one thing that he could count on was for the market to remain erratic. He said that this may happen at the same time as a financial crisis. When asked about the future of the S&P 500, Dimon predicted that the index might drop another easy 20% from present levels, adding that such a drop would be considerably more severe than the first. In an early June speech to a room full of analysts and investors, Dimon warned that the Federal Reserve and Russia's conflict in Ukraine would trigger an economic storm. At the time, Dimon remarked, "JPMorgan is preparing ourselves, and we're going to be extremely careful with our balance sheet." Investors, he said, should follow suit. On Thursday, investors will be watching the release of the much-anticipated inflation report, as well as a flood of quarterly earnings reports from major companies. On Friday, September 29, JPMorgan will report its financial results for the third quarter. The stock price of the bank has decreased by almost 33% so far this year. It is clear that a number of factors contributed to the United States' inability to properly rescue its currency. The first issue was that people didn't realize how important it was to save money. Second, there was a lack of political will and commitment to take the necessary steps to preserve the currency's value. Third, there was a failure among the various groups engaged to cooperate and coordinate. Finally, the incapacity to save cash was impacted by economic, social, and environmental factors. A scenario like this is currently worse than a recession. Thanks for watching this video. I really hope you enjoyed it. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.